you sell things to raise cash. And if you're in the weekend, what can you sell? There's only one thing you can sell. It's Bitcoin. Unless you're trading in the, in the off hours, the after, when you're trading in the off hour market on Sunday afternoon, you could do that a little bit. But the easiest thing, the most liquid thing is to sell Bitcoin. So what we're seeing is some of that happening too, where, if you're in this debasement trade and you're seeing gold and silver go way up or way down, you're moving around your positions. Well, Bitcoin's the easiest thing to sell to raise cash in, if that's part of your thesis. And so that's part of it too. And just general nerves in the market and seeing that Bitcoin has rolled over.
Bitcoin's been getting absolutely smacked around lately, sliding under $60,000 after flirting with $100,000 just a few weeks ago. The whole move feels like a cocktail of market nerves and weekend chaos, with hedge funds dumping bags just to keep their books breathing. And of course, when everything else is snoozing on Saturdays and Sundays, Bitcoin becomes the easiest thing to torch for instant liquidity. So the sell-off snowballs, even while gold and silver are ripping higher because everyone's freaking out about currency debasement. Then you've got James Lavish jumping in with his breakdown of the madness. He points out that a bunch of early Bitcoin diehards, the folks who've been sitting on ridiculous gains since the dinosaur era of crypto, are finally cashing out and rotating into real estate or whatever shiny asset catches their eye. That frees up a ton of coins for hungry new buyers, but it also sets the stage for chaos. Meanwhile, gold and silver mooning over 60% in a year? Yeah, that's pulling eyes away fast and firing up fresh waves of FOMO. Hedge funds treating Bitcoin like it's just another twitchy tech stock doesn't help either. Futures, leverage, margin calls, pick your poison. And Mondays after those weekend freakouts? Haircuts on leveraged positions explode from 5% to 25%, forcing traders to nuke whatever sells fastest, Bitcoin. Lavish says this doom loop continues until everything gets flushed out, but he still calls it healthy. OGs cashing in, new capital rotating in, and the usual crypto drama doing its thing. As we bring you more clips from James Lavish's interview, kindly take some time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. They would help boost the YouTube algorithm and support the channel's growth. Thank you for tuning in. Please enjoy the video.
The answer is, long-term, you have to own assets. And now if you're sitting here and you're listening to this and you're saying, yeah, that's great. I can barely pay my bills. How am I going to buy assets? That is the problem. That's the challenge. That's the frustration. And I get it. That is the absolute frustration. You're working your tail off. And if you're a little bit older than Nikki, if you're out there and you're married, you're both working, you're renting, and the rent is going up, the gas is going up, the groceries going up, and everything, and you're trying to have a family, and then daycare and everything costs so much money. How can you do it? Well, that's it right there. That's the frustration, is that we've gotten to a point where it requires all of your energy just to keep up. And that's not fair. It's insidious. It's wrong. And that's why we have all turned to Bitcoin as something to help get us out of this hole. Well, how can it help? Well, it can help individually when you're young and you're just trying to do anything you can. If you could just take a little bit of your paycheck and just throw it into Bitcoin and put it away and don't even think about it. Just put it away and don't even think about it for a very long time. 5 years, 10 years. You'll wake up, it'll be worth way more than it is now. We can discuss that in a moment. But the second thing is, well, Bitcoin is the only asset that's ever been created that is truly decentralized and can't be printed. And so for the listeners to understand what I mean by that is that Bitcoin is governed by code that's run on tens of thousands of computers across the entire world that nobody's in charge of. And if somebody tries to change that code, they get kicked out of the network. And so you can rest easy that if you own Bitcoin, it's going to be governed by that code. And somebody might say, well, why don't you just have somebody buy a government could just buy a whole bunch of computers and have enough computers that they could change the code because they could have more than 50% of Bitcoin. That's not the way it works. The moment that they try to change the code, all of those computers would be kicked off the network instantly. And so they would only be able to change the code for one transaction, and then it would be gone. And so it doesn't work. The network is secured by it's the equivalent. The energy equivalent is 22 full scale nuclear reactors running 24/7. That's how many terawatt hours it takes to power the Bitcoin network. So it's not going to. It's a digital fortress. It's not going to be broken. Okay, so it's the fear about quantum computing, all that's a ways off, and they're already working on ways to secure the Bitcoin network against that when it does happen. So that's not a fear of mine. It's not a worry of mine today. But anyways, so that's the other side of the equation. So as an individual, you can buy it and hold it and just wait, and it will retain its value against all these currencies that are devaluing and debasing against it. That's number one. And then the flip side is what you hope is that central banks start buying it. And central banks start buying it in order to shore up their own balance sheets, to have something that can't be debased that they can hold against their bonds. So just like they're owning gold, it's the same exact thing. They'll soon start buying Bitcoin. I believe that'll start happening in the next few years, if it's not already quietly happening. But they will start doing it, and they'll hold gold and Bitcoin. And eventually, Bitcoin will be the one that they want more than anything. And that is what will save the whole system. And at that point, that's where you get to a situation where if the United States does this first, it becomes game theory. Whereas the U.S. Treasury owns a bunch of Bitcoin, then all the central banks in the world have to buy it. Because if the U.S. Treasury has it, and we're the global reserve asset and the global reserve currency, then they've got to buy it too to protect their balance sheets. And so once that happens, that will help shore up the U.S. dollar to not be debased so rapidly. And that's the hope for the future. So I can see a future where they'll kind of work, concurrently for a while, where the U.S. dollar is being spent as the ultimate currency, the global reserve currency, but then you've got Bitcoin as this global reserve asset that everybody's got, and that will be kind of like they'll work in tandem instead of this terrible system we have now where we've got a bunch of bonds that are decreasing in value every year because we keep printing more money. And who wants to own bonds when you're printing more money?
Do you ever think we could see a US dollar that is backed by Bitcoin the same way it was backed by gold?
Well, that's kind of what I'm saying, is that eventually I think that that's a system that we can get to. It will require some time. It will require a great leap of understanding from where we are now. We're nowhere near it. People want it to happen in the next 2-3 years. It's not happening. It's going to take a while. It may take another massive print. Once we have another catastrophic event like we had in COVID 2020, and we printed $5 trillion. If we have some sort of black swan event again, they're not going to print $5 trillion. It's going to be 10 trillion, 20 trillion. They're going to print so much money, it's going to make your face melt. Like people, and it'll be hard for, people who don't own things, who don't own assets, who don't own gold or Bitcoin or housing or a real estate or a business. It'll be really hard for people who don't own those things. And that's the worry I have, is that's why we try to get people out ahead of this and say, just buy some Bitcoin now and just sit on it. Don't even think about it. Just leave it there. Don't worry about it doing this, because that's normal in an asset, an emerging asset that's being adopted. It's typical. And so you're seeing what's happening with the volatility of gold and silver now. Well, that's because people are running to anything they can to protect themselves. And they're protecting themselves against this crazy debasement. I would imagine that the people your age are feeling like they've got to take more and more risk just to keep up. If you're going to buy something, you want to buy something that can make you real returns. That's why people are betting on Polymarket. That's why people are buying meme coins or buying, cryptocurrencies that are not Bitcoin, things that they think can go up 100 or 200 or 500x, because they just want that, they want a lottery ticket that maybe it'll hit. Maybe I'll turn this $1,000 into 100,000. That's what they want. And that unfortunately has been ingrained in the younger generation to have more of a lottery ticket mentality. It's not your fault, to go out on the risk curve and do those things. But the sensible thing is to be metered, be disciplined, buy these things, buy some Bitcoin, put it away. Don't even think about it. Quietly, just keep at your work, do what you're doing, and find a way to get a surplus in your budget so you can battle against the deficit in the government's budgets. And that's really the key right there.
This bear market has everyone feeling squeezed, and not just in their portfolios, it's in daily life too. People are wrestling with rent that climbs like it's on pre-workout, gas that feels like a subscription fee, groceries that ambush your wallet, daycare that costs like a second mortgage, and family expenses that never stop multiplying. And that's exactly why Bitcoin keeps resurfacing as the lifeline in all this chaos. It's the rare asset that doesn't get watered down by politicians with printers. Nobody owns it, nobody controls it, and nobody can manipulate the open-source machinery running across tens of thousands of nodes. Its security output rivals 22 nuclear reactors, a digital citadel built for storms like this. Zooming out, the next major catalyst in this bear slog could be central banks stacking Bitcoin the way they hoard gold, triggering pure game theory. If the US Treasury moves first, others follow, pairing Bitcoin with the dollar instead of collapsing into debt-heavy bonds. Younger people chase meme coins for thrill spikes, but the real edge is steady. Manage risk, stack Bitcoin, build surplus, and stay grounded through the bear market grind.
There's a few things that are going on. There's been a rotation into this debasement trade with gold and silver, and that's caused a bunch of kind of a little bit of FOMO. I mean, you saw these things rise. If you've been watching markets, gold and silver are, they were up 60%, over 100% in just a year. It's crazy. And so you saw part of that. And so that got a lot of the attention. That's number one. They came into favor. The second thing is you had some OGs that were selling, and that's just reality. You had OGs, the maybe this is an acronym from my generation, but it's the original gangsters is what it is, the acronym. But they, it could be PG-13 could be the old guys. So the old guys were selling. The ones who were around, they're a lot younger than me, but they're around in 2011, 2012, 2013, buying Bitcoin when it was, just a couple dollars to a couple $100, and now it got over $100,000, and so they monetized it. They decided, you know what? I've been in this thing for all this time. I said if it ever got to $100,000, I would sell, and here it is. And so I'm going to sell some, or I'm going to sell all of it, and I'm going to take that money. I'm going to go buy real estate. I'm going to go buy, I'm going to go buy a house or land or that yacht or a plane or whatever, because we're talking about tens of millions, hundreds of millions, and sometimes billions of dollars that these guys have made, or gals have made from, they were just, some of them may have just been computer gamers, or just people that were the people were operating in the tech circles way back when, and we call them cyberpunks or cypherpunks. And so they got thousands of Bitcoin. They're like, I'm going to sell some here. This is crazy. I'm going to go and live my life. That's fine. That's actually, it's understandable, and it's not a bad thing. So you're taking all of those coins and now you're putting it back into the ecosystem where younger people can buy them, and they're not just tied up all these years. And so, and that's kind of set off the cascading effect where Bitcoin was going down, gold and silver were going up, and it kind of fed on itself. That's one thing. The second thing is there's some nervousness in the market. There's some nervousness in the market about what people own and what's happening with it. Bitcoin has acted like it's been an extremely risky asset for a very long time. Like it's been a speculative thing, like a tech stock for years. And so hedge funds hold it typically like that, where it's a risk asset. And so they're playing around with it. They'll own it. They'll do hedge trades. They'll sell futures against it, or they'll buy futures and sell. It depends. Like they're doing basis, or they're doing cash and carry trades and just playing around with it mostly and trading it. And so when something happens, though, and this is really difficult for people to understand, frustrating for Bitcoiners especially, is like, why does it seem like every single time we get into a weekend and there's some bad news, or there's some possible nervousness in the markets and Bitcoin crashes? Why does that happen? Well, I'll tell you why it happens. If you're sitting on a hedge fund, okay, well, we would come in and let's say that we would come in on Monday morning. This is the markets didn't trade on the weekends. So we would come in Monday morning and things were going haywire in Europe or whatever. And we were like, okay, when the market opens, just sell 10% of everything we've got because we're crashing. It doesn't matter. I don't want to know. It doesn't matter. Just sell 10% or 20% of the whole book. It doesn't matter if it's GM, if it's GE, if it's Tesla, if it's, I don't care what it is. Microsoft, Apple, Amazon, sell it. I don't care. And so you sell what you can, not what you want to. So on the weekend, Bitcoin can crash because hedge fund managers and in Asia, maybe they'll say, well, just sell some Bitcoin because I can raise cash. Then I know on Monday morning, if I come in and I get what's called a margin call, meaning remember what we talked about on long-term capital management, they were getting margin calls on all their trades. Well, yeah. So if you're a hedge fund and you get a margin call, meaning that you're getting, when markets crash, what happens is the money that you borrowed against your stocks, okay, you get what's called a haircut. So on your positions, on all your positions, it could be treasuries too, but the haircut is how much money you have to put up to hold that asset. And when you're a hedge fund, you can get these blue chip stocks and only have to put up 5, 6, 7% and borrow the rest of it. So you're borrowing 94, 95, 96, 7% against it. So you're getting almost 2 to 1, or you can get 20 to 1 leverage on that, right? On that simple trade or more. And so what happens though is that when you have a market crash, you come in that Monday morning and your prime broker says, yeah, that haircut's not 5% now. It's not a 5% haircut. It's a 25% haircut. So you got to come up with 20% of that, the value of that position, just to hold it, or they're going to sell the position for you in order to get that, or you could raise cash around it. So to get ahead of it, you sell things to raise cash. And if you're in the weekend, what can you sell? There's only one thing you can sell. It's Bitcoin, unless you're trading in the off hours, the after, when you're trading in the off hour market on Sunday afternoon, you could do that a little bit, but the easiest thing, the most liquid thing is to sell Bitcoin. So what we're seeing is some of that happening too, where, if you're in this debasement trade and you're seeing gold and silver go way up or way down, you're moving around your positions. Well, Bitcoin's the easiest thing to sell to raise cash in if that's part of your thesis. And so that's part of it too. And just general nerves in the market and seeing that Bitcoin has rolled over, there's a sentiment, super negative sentiment around it right now. And that feeds on itself. And that's not going to stop until it does. And typically it takes a complete washout for that to happen, which means that it takes everybody to be so scared and so nervous that if you vowed you're not going to sell, you are absolutely not going to sell. You're going to be one of those people that doesn't sell. Well, until all those people sell, it's going to continue going down.
James Lavish explained that a rotation into debasement hedges like gold and silver has sparked FOMO, with those metals surging over 60% and even 100% in a year, grabbing headlines while Bitcoin pulled back. He noted original Bitcoin holders, OGs from 2011-2013 who bought at a few dollars, are now selling after prices topped $100,000. These early adopters, often from tech or cypherpunk circles, cashed out tens or hundreds of millions to buy real estate, houses, land, yachts, or planes. This ended up freeing up coins for younger buyers and amplifying the downward cascade as gold and silver rose. Market nervousness adds pressure, Lavish said, since Bitcoin has long behaved like a risky tech stock. Hedge funds treat it that way, trading futures, basis trades, or cash and carry plays. On weekends, without traditional markets open, bad news prompts quick sales. Managers dump Bitcoin for cash to dodge Monday margin calls. He described how crashes trigger haircuts on leveraged positions, say from 5 to 7% collateral to 25%, forcing funds to post more money or liquidate whatever sells easily, like Bitcoin. This negative sentiment feeds itself, James Lavish pointed out, persisting until a full washout scares out even die-hard holders who swore they wouldn't sell. To wrap this up, have you started setting aside a small piece of your paycheck into Bitcoin to hold for the long haul, or are rising costs still making that feel out of reach? How do you think Bitcoin's role as a liquidity alarm influences its price movements compared to traditional assets like gold? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.